So a couple of years ago, I gave still not down here, by the way. There we go. A couple of years ago, I gave a speech here called The Art of War. And it resonated with me so much because, probably like many of you, you wonder what the heck's going on. Everything is so counterintuitive. And all of the things that seem so clear to us really don't make much sense. I have a client, as I mentioned 2 years ago, who is a lead white-collar criminal investigator for the FBI. We have fabulous conversations. They go deep and long, and he's been a great value to me personally and professionally. And one day I came into the office, and there was an envelope with his name on it and a book inside called The Art of War. The Art of War was written in the 5th century BC by a Chinese military strategist named Sun Tzu. And as the note on the book that he had penned to me, wrote to me, mentioned, The Art of War is a very prolific book. It's taught in almost every major business school across the globe on corporate hierarchy. It's taught in almost every major law school across the globe in formulating arguments. It's mandatory reading at the CIA. It's mandatory reading at West Point. It's highly encouraged for all Japanese business executives and highly encouraged for all US military executives. For any of you football fans out there, Bill Belichick uses it to employ his strategy. And if any of you ever play fantasy football and draft a running back from the Patriots, you'll understand that. They may score 5 touchdowns one day and not see the field for the next 2 games. The Art of War is completely about how to beat your opponent without throwing a punch. This statement, when you engage in actual fighting, if victory is long in coming, then men's weapons will grow dull and their ardor will be dampened. If you lay siege to a town, you will exhaust your strength. What that says to me is that the people accumulating gold and silver, namely the central and commercial banks, know their Sun Tzu very, very well. If you think over the last 8 years, what we have seen over the last 8 years are some of the most sophisticated, well-funded, well-informed, influential traders on the globe amassing tremendously large positions of physical metal. We'll talk about that in a moment. And they've been doing that by manipulating the forward option contracts on the COMEX market, by creating a perception of reality whereby technical indicators look bad and counterintuitive movements are the norm. A bomb goes off somewhere, we think gold should go to the moon and it gets clobbered. Or our friend Harry Dent says technicals look bad, gold's going to go to $300 an ounce. That has enabled them through misdirection, classic misdirection, to, in essence, amass some of the largest physical positions the world has ever seen. So in deciding what I should talk about this week, I looked at the Art of War speech I gave 2 years ago, and I said, my goodness, so much of what I talked about is coming true. I want to show you. In 2017, what I said, first and foremost, is that my industry is filled with deception. And I hate to say that because it is. In 2017, I showed you the companies that had gone bankrupt. Tulving, Bullion Direct, Northwest Territorial Mint. Those 3 companies alone, almost $200 million is gone, never to be recouped by the people who lost the money. This industry is federally non-regulated, except in my home state of Minnesota. We are the only state in the United States where you have to be licensed, bonded, and background checked. We have a 7-figure surety bond. We have background checks of every one of our principals and employees, and annual compliance and continuing education that has made the entire industry say, screw Minnesota. I don't want anything to do with Minnesota. Almost every company in the industry, over 99% of them, will not sell 1 ounce of gold into Minnesota because of the regulation. We are as regulated as Sprott is. We have compliance and continuing education and licensing and bonding that makes doing business in the state of Minnesota with us safer than anybody. Now, Rick tells you we've never had a customer complaint from any of his clients. That's because I answer the phone if I'm sleeping, if I'm on a beach, or if I'm in the middle of a concert or a dinner, I walk away and talk to you folks. I do. We're a company that does $300 million in business or on par to this year, and I take the calls. That's how important my relationship has been for the last 15 years with Rick. It means the world to me and all the folks at Sprott. When you call, you get me. But look what's happened since then. I told you this was happening. Royal Metal Groups, I could have picked 10. I took 3 of the biggies. Lear Capital. And just recently, Metals.com receives a cease and desist. Now, these are all online companies who try to bait and switch you into buying things that are cheap, and then they screw you. And you never know how important a good reputation is. In fact, we've never had a customer complaint ever in 29 years. Spend the afternoon looking on Google. Type in Miles Franklin fraud, Miles Franklin complaint. You won't find one. It's something we're very, very, very proud of, but I will tell you this. This industry attracts people's desire to find the best price, and if that is what you are looking at first and foremost, there's a 50% chance or better that you're going to end up in the wrong place. The whole secret lies in confusing the enemy so that he cannot fathom our real intent. I agree with that. Misdirection, classic misdirection. Well, we talked about industry deception. How about market deception? Market deception is where it starts to get a little bit more interesting as far as I'm concerned, typically centered around the commercial and the central banks. Commercial and the central banks are the primary culprits in creating a perception of reality that has allowed so many of these large money institutions to effectively corner the physical market. And I'll get to that in a moment. But counterintuitive attacks is part of the reason that this concept of misdirection really resonates with me. How many times have you seen something in the news and cannot believe that the price hasn't gone up? In fact, it's gone down. That's orchestrated. It's all about perception of reality. My good friend Jim Sinclair calls it MOPE, Management of Perception Economics. You are being led towards a perception of reality that is allowing other people to go the complete and other direction. Technical attacks. Harry Dent will tell you the technicals look bad and gold should be 300. If you are a big money center who has the ability to control the price of gold and silver by selling forward options, it's easy for them to do. I'll give you an example. If I want to buy a 100-ounce gold contract, all I need to have is $4,000 of margin in my margin account to control $140,000 worth of gold. So what if I'm JP Morgan and I decide I want to sell short 5,000 contracts just to see what happens to the price? So what I'm saying to you, and we'll get to this in a moment, technical and counterintuitive attacks are very pervasive. Do not trust your lying eyes. Trust your gut. Your gut is what has you all sitting here. And most of the public doesn't have a clue. But you have come here and have hung on with strong fingertips for 7, 8 years because your gut resonates with you, but your eyes say, well, what the hell? I don't get it. Think misdirection. Any game you've ever played, whether it be chess or checkers or baseball or football, any game where there is an opponent, the idea is to misdirect the opponent. The no-look pass, the sending the pawn up this way so the queen can go around that way. So why would it be any different in business if the theories are taught at the CIA, in every business school, in every law school? Why at West Point? If it's mandatory reading, it must mean something, right? Well, to me, it means everything. This leads to a flawed perception of reality. 110%, it leads to a flawed perception of reality, which allows people to make the wrong decision. In 2017, I showed you how the banks have paid $321 billion in fines. That's just okay by us nowadays, right? We just accept that. Well, look what's happened in 2019. Another $50 billion in fines in 2 years for LIBOR, for the Forex, and now for precious metals. How do you like that? JP Morgan, one of their head traders just settled a case with the CFTC for manipulating the precious metals market. As Chris Powell says, and if any of you own gold, which I'm sure most of you do, you should all owe a debt of gratitude to Chris Powell and Bill Murphy from the Gold Antitrust Action Committee. They are the ones who have shown the light upon the manipulation in the gold industry, and I always like to, when I get a chance, just give them a kudos. But suffice it to say, it's now become a fabric of our society, and we just accept the fact that these big banks that create the markets have all the information They just get a slap on the wrist and pay $50 billion since we last talked about this. And it's projected to go up to $400 billion by 2020. So in other words, the people who are more or less controlling the markets are lying to you. But why? Why manipulate? That is the question. It's not to manipulate for the hell of it. It's to manipulate for a reason. Or how about our own government? Our own government who gives us this flawed measurement stick. They say that their actions are dictated by full employment and inflation. This is from John Williams' Shadow Stats. I encourage you all to read Mr. Williams' Shadow Stats, another fabulous source of information. The bottom line is, what you see here at the top, the blue line, is what Mr. Williams says is the real unemployment. And all he does is calculate it from years gone by under Carter and Reagan. They keep changing the measuring stick. Now, the government will tell you we have under 5% unemployment, but the real level of unemployment is over 20%. And as far as inflation is concerned, I mentioned this 2 years ago, my son goes to the University of Michigan for $70,000 a year. Tell me there's no inflation. Tell me there isn't. Inflation, according to Mr. Williams, is running near 10%. According to our government, it's 2 or 3%. Who's telling the truth? I would argue that it is John Williams and not the Bureau of Labor Statistics. You could take the L out of the Bureau of Labor Statistics and get a better acronym. They understate inflation and unemployment because these are the things that the Federal Reserve is supposed to do. They're supposed to foster full employment and keep inflation in check, and they're doing a crappy job of it, and they are lying to us all so we all make the wrong decisions. The clever combatant imposes his will upon the enemy, but does not allow the enemy's will to be imposed upon him. That's J.P. Morgan, if you ask me. In 2017, I showed you how J.P. Morgan had increased their silver stockpile 120-fold to over 600 million ounces. That was the largest physical position the world has ever seen. What's happened since then? Well, their stockpile now, according to Ted Butler, is over 25 million ounces of gold and over 850 million ounces of silver. The Hunt brothers nearly went to prison for cornering 100 million ounces of silver. The most sophisticated traders on the planet, the most well-funded, influential, sophisticated traders on the planet have accumulated 8.5 times that amount. And it is the largest physical position the world has ever seen. Why are we not hearing about this? But the question is, whose is it? I'm going to talk about that later today. I hope you'll come to my breakout where all of these topics will be expanded upon. 15 minutes doesn't do justice, but what I will say to you is that in 2 separate interviews, both Blythe Masters, who ran the J.P. Morgan trading desk, and Jamie Dimon, their CEO, both independently said, we do not accumulate metal for our own book. It is on behalf of a client. Who has those kind of deep pockets? We'll talk about that. Well, central banks have been buying too, and they haven't stopped. That's what I talked about in 2017. I showed you that the central banks were behind or ahead of the curve, buying ahead of the crowd. And at that time, it was only 4% annual growth, but now it's 2.5 times that 2 years later. As the price has been trending downward, the most sophisticated traders on the globe who have created a false perception of reality are cornering the physical market. The central banks, the commercial banks, they are loading up on it, but why? Why? That's what we'll get to. And I said China and Russia in 2017 were loading up on gold and silver, and they are, and they were. And what are they doing now? Well, now the trend continues. Both China and Russia are de-dollarizing. In fact, if I were in charge of this conference, I may have called it the de-dollarization of the gold market, something along those lines. To me, the big money is de-dollarizing. We're going to get to that in a moment as well. But they didn't just stop with gold. They're doing it with silver. They're amassing enormous quantities of silver. They're doing it in fossil fuels. They're doing it in base metals. They're doing it in all of the world's commodities that are able to be controlled by the forward option contracts on the COMEX and the NYMEX. And by controlling the price, most of us don't have the energy to lift up the hood and see what's going on underneath. We look at the price and we move on. If you control the price, you create a perception of reality that allows all the big money to say, look at the dummies going this way, and they scoop up their pockets with enormous amounts of metal and commodities and things that you need to move forward in this world. And the Chinese are doing the same thing now with silver as well. Are you beginning to see a trend? I hope so. How do they accumulate it without driving up the price? I get asked that question a lot. Well, this chart from Dmitry Speck, to me, is worth ingraining into your head. This chart is 10 years worth of trading crammed into one chart, over 3,000 days. So he takes all of the market action over 10 years, puts it into one chart. And what do you notice at the AM and the PM fix? Price interventions. That's not how free markets work, okay? You should not see a clear slam down on the PM fix on 10 years worth of cumulative price action. But if I were a big company like JP Morgan amassing the single largest physical position of metal the world's ever seen, when do you think I would be buying my physical? Well, I think it would be during New York trading. That's when I would do it. In fact, if you look over 10 years, the price in New York has gone nowhere but down. And as London closes, that's when their physical orders are probably flooding in. Let's buy it when London closes. Keep the price down. This is price manipulation right here in front of you. But this, how many people, show of hands, know what this means? Basel III. Okay, a couple dozen. If you don't know what Basel III is and you own gold, you ought to go home and research it right away. I'll tell you basically what Basel III is. Prior to Basel III, gold was considered a tier 3 asset, which means 50% of its value was calculated on the books of the entities that owned it. Now, it's a tier 1 asset. It means 100% of the value is on the books. It gives tremendous amount of incentive to de-dollarize. It gives incentive for the countries who have maybe not the fondest admiration for the United States to sell their dollars or their treasuries and buy gold, which are now valued on the same level as treasuries and gold. The implications of Basel III, to me, is foreshadowing, or at least it tells me that the central banks who are accumulating understand this. They understand this very well, that now, for the first time, gold is on par with cash and U.S. treasuries. And for those people that didn't want to hold them any longer, they now have incentive to do so. Neighboring giants, Russia and China, intend to accelerate their de-dollarization. It seems to me that perhaps they're working on unilateral trade deals to usurp the dollar. And when that happens, God forbid we wake up to find OPEC saying, you know what? We're going to take oil in yuan and in ruble as well. If that happens, within 24 hours, you will understand vividly why you own precious metals. Very, very much so. So again, the big money is trading ahead of the curve. They are de-dollarizing for a reason. Perhaps the implications of Basel III is foreshadowing for what comes next. Perhaps it'll be an Eastern Bloc currency that has some sort of gold backing and a Western Bloc currency that's based on debt, right? Which one do you think over time will win out? Gresham's law will tell you very quickly that good money will chase out bad money real quick. And when you take a look at what JP Morgan just said to their private banking clients last week, they came out and said, we believe the dollar could lose its status as world reserve currency and are recommending their clients reallocate their portfolio into a mix of precious metals and other foreign currencies. And that is a chart that they published that's going around the internet now that's getting a lot of buzz, showing just how long, going back to 1400, how long world reserve currencies actually last. So to put all of our faith in the US dollar is a big mistake. And when people say, how much gold should I own? I would say that's the wrong question. The question should be, how much money should you keep in the US dollar? Do you want all of your assets in the US dollar? A country that's $22 trillion in debt? $150 trillion when you take into account unfunded liabilities, Medicare, Medicaid, Social Security, government military pensions. It just came out and said that Social Security will be bankrupt in 15 years, that it's $52 trillion in the hole. That puts us just from Social Security and our national debt, $75 trillion in the hole. Why is this not being talked about? Do you realize 1 trillion seconds ago was 31,688 years ago? The numbers are too big to ever be paid off. This is why they're de-dollarizing. This is why they're doing it quietly. And you should ask yourself, why is it not front and center news that the world reserve currency is 75 trillion in the hole, not even taking into account things like Medicare and government military pensions and all of the like that pushes us well north of 100 trillion by their own admissions. The US dollar is losing its share of central bank reserves, and you can see it's doing so in a very precipitous manner. It's starting to accelerate. So really the idea here is to mitigate and minimize your position of US dollars. The big money is doing it ahead of the curve. When I was a Series 7 broker many moons ago, I opened up the book, and on page 1 of studying to become a Series 7 licensed broker, there was something called the little man rule. And the little man rule, this is page 1 of a mainstream Series 7 securities book. The little man is the man who never wins because he or she is always making their moves after the trend has been established. The big money is making their move. They are making their move, and the dollar is in big trouble, as far as I'm concerned. The last thing, the last quote from Sun Tzu, is the opportunity to secure ourselves against defeat lies in our own hands, but the opportunity of defeating the enemy is provided by the enemy himself. There are ways to win. There are ways to get ahead of this. At 2:30, I believe, today, I will be talking about this. I will be expanding on all of these issues, and I will let you know about some anomalies that I've never seen in 30 years of owning a precious metals company. Some opportunities and some distortions that I never, ever, ever thought I would see, that I will tell you front and center are the best opportunities I've ever seen in 30 years in owning precious metals. I would love the opportunity to chat with you. And again, I just want to thank Rick and the folks at Sprott. It is a true honor to be here. It's something that I take very, very seriously. Given the opportunity to work with any of you, I'm sure I'll show you that, and we'll never let you down. So thanks again. I appreciate it.